So please run through the tests. Okay. So shall we start with the questions? I'm starting with question number 2 first. Mohan Limited furnishes the following summarized balance sheet as on 31st March 21. They have given share capital, equity and preference, reserves and surplus, capital reserves, general reserve, securities premium, P&L revaluation and infrastructure development reserves are given. So what are all the reserves that will be considered? General reserve, securities premium, profit and loss account. That's all. The others are all not free reserves for the purpose of buyback. Now, non-current liabilities, we have 7% debentures. Unsecured loans is given. Now, current assets, plant and equipment and investments are given. Other current assets are given. Okay. Other information. The company redeemed preference shares at a premium of 10%. So, redemption of preference. It also offered to buy back the maximum permissible equity shares of 10 each at 30 on 2nd April. Third, payment was made out of above bank balance, which means they are not issuing fresh shares. They are making out of existing balance. Company had an investment in own debentures costing 60 lakhs and they were cancelled on 2nd April. So cancellation of own debentures. On 4th April, company issued fully paid up equity shares by way of bonus. So 4 scenarios are clubbed in this question. Preference redemption, buyback, then we have own debentures cancellation and we have bonus issue. So here we are going to calculate buyback considering all these factors, right? Calculate the maximum possible equity shares that can be bought back. That is what is going to be our focus of learning now. Journal entries, I'm very sure you will be able to do on your own. So let's focus on the conditions here, friends. Okay. So first thing, whenever you have multiple questions, multiple scenarios clubbed in a question, go by the date order. Go by the date or go by the order of the question, whichever is available. So here dates are available. So redemption of preference is happening first. After that only buyback is happening. So when we do the conditions testing, we should remember that preference redemption has already happened. Okay. Right? So this is one point we need to remember. The relevance of it will come when we are doing the resources testing. Okay. So first let us do condition 1. Shares outstanding test. For shares outstanding, what is the criteria here? 25% of the equity shares. So what is the equity share capital outstanding? 780 is the amount. So 78 lakhs, correct? 78 into 25%. 78 lakh shares into 25%, which gives us 19.5 lakh shares. 780 is the equity share capital divided by 10. Okay. Next, resources test. Ingeda, we need to be careful. What are the available resources? What are the resources we need to take? Equity capital, securities premium, and other free reserves. So let us go to equity capital 780. plus securities premium available in the question is 52. Securities available, premium available is 52. General reserve is 625. Okay, let's do one by one. Plus 52 plus general reserve 325. Yeah. 625 plus P and L 148. Correct? Ideally, that's all. But here, preference capital is redeemed. Preference shares are redeemed. Let us see at what price preference shares are redeemed. Premium of 10 percentage. Premium of 10 percentage preference shares are redeemed. So please calculate the premium on redemption of preference shares. What is the premium? I think 240 into 10 percentage, 24 lakhs is the premium. So securities premium now available as resources will not be 52, it will be 52 minus 24. Listen carefully, then you can take down. It will be 52 minus 24. Inge mudila. Preference capital is redeemed means CRR has to be created for the preference shares that is redeemed. CRR is not a free reserve. So, CRR for preference redemption. What is the value of CRR for preference redemption? 240, right? Face value of preference shares redeemed. So, 240. Okay. So, now I will subtract. I have already subtracted securities premium. Now say assume from general reserve I am subtracting the CRR. 625 minus 240. Now find out your resources. Total resources available. One three 1341. Okay. Into 25 percentage. So yeah. Into 25 percentage, which is 335.25 lakhs rupees. Okay. But our answer will not be completed until we find out the number of shares. So number of shares to be redeemed, to be bought back, 335.25 lakhs divided by, what is the buyback price? 30 rupees. What is the buyback price in the question? 30. So what is the number of shares? 335.25 divided by 30? 175. 11.175 lakhs shares. Idhula round off pannadinga, we are already dealing in lakhs. Okay? Egapatta round off aidu. 11.175 lakhs shares. So, the most important point here is CRR needs to be created later only. No, here resources outstanding is 25% of the resources available. Test 3 la CRR to be created for equity. Okay. Shall we do the test 3 now? Test 3 debt equity test. Okay. Just remember the formula order. First, what is the minimum equity to be maintained? Minimum equity is nothing but long-term loans, which is 268 plus unsecured 36, totaling to 268 plus 36 is 804, 304. 304 by 2, which is 152 lakhs. What is the second formula? Resources available. Available for buyback is equal to, okay, total resources. We have just calculated the total resources 1341. Same number you can use. 1341 minus minimum equity to be maintained 152, which gives us 1189. 1189. Formula 3 another CRR. Assuming the number of shares is X, CRR is 10x. Face value of equity into number of shares. And what is the buyback value? Yes, buyback value is 30x. Buyback value is 30x. So therefore, solve the equation. Resources available for buyback 1189 is equal to 10x plus 30x, giving you 29.725 lakh shares. So x is equal to, yeah, okay, 29.725 lakh shares. So now going by this, what is the minimum number of shares that can be bought back? Yes, minimum of the three, 11.175 lakhs shares. 11.175 lakh shares at 30 rupees, which gives you 0.5 lakhs. 335.25 lakhs to 29.725 we are comparing minimum. Okay. Now once this is arrived, then the entries you need to pass in the order. First, redemption entry. Preference redemption entry. Second, buyback entry. Third, going by the question, cancellation of debentures, which will be made to capital reserve, transferred to capital reserve. Fourth, issue of bonus. But remember, in bonus, you should issue for bonus after buyback, whatever is the equity shares, adula da bonus issue panna porom. Because here bonus date is after buyback date. So whatever is the number of shares that is after buyback, we need to calculate bonus on those shares. Right? So I believe the entries for preference redemption, debenture redemptions, you would have learnt. Okay. The answers, I will give you the answers in the journal entries also. I will be posting it to you. Here, the crux is calculation of the number of equity shares. Any doubts in the calculation? Yes. Any doubts in especially the third test, because that is the lengthier calculation. Any doubts in that? Okay, journal entries. Okay. Okay. So you want me to summarize the flow of the transactions. Okay. So I'll quickly summarize the flow of transactions. First entry will be preference redemption. Then premium write-off on preference redemption. Then CRR for preference shares. So preference ke 3 entries varum. premium redemption, preference redemption, premium, and then CRR. Then come to buyback. CRR is at face value. Then coming to buyback entry, premium right of entry, settlement entry, and then your CRR entry will come. Okay, so for both mandatory CRR entry has to be passed. Settlement of shares and then CRR entry. Settlement entry will be there for preference also. Okay. Next, third one is just information. Fourth one, own debentures cancellation. Cancellation entry. After cancellation, transfer the profit on cancellation to capital reserve. Okay. So transfer of profit to capital reserve. Last, bonus. Bonus can be declared out of, you can use CRR itself to declare bonus if you have because we have CRR in this question. You can use CRR to declare the bonus. For whatever balance, you can use general reserve or free reserves available. Okay, so this will be the order of the entries. The entries will be posted along with your solutions. You can check the entries in the solution. The crux here is to understand the tests. Any doubt in the test and calculation of the formulae? This is one question which was asked in one of your exams only, I believe. Okay, for 10 marks, where the major weightage was given for debt equity ratio and that resources test. Okay, because the test we need to consider preference redemption point we have to remember underline and do. So that was the only crux of this question. Exactly. Because the date is prior, we need to consider as if the preference is completed. Preference redemption is completed. So the maximum adjustment. Clear, friends? Okay. So this summarizes buyback of securities. Any doubts in the chapter? Okay. Clear with this, friends online? Okay. We are moving on to the last chapter, banking companies. Okay. Friends, this chapter is a format oriented chapter. So I am going to quickly run through the formats and formulae for you and you can practice the questions. I will run through the questions also along with you for the points to be remembered. You can practice the questions independently because it is format based. So I believe you will be remembering the formats and reciprocating them in the exam. This chapter is a solid 10-mark chapter. Sure shot 10-mark chapter. Okay. Minimum 10 marks. Sometimes even more, but minimum 10 marks for sure. Okay. And in the 10 marks, there is a lot of chance where they ask profit and loss account format. Friends, please listen. If you parallelly talk, then I can't raise my voice beyond this. So there is a lot of chance that they are asking you on profit and loss statement. So if profit and loss statement is tested, we have to reproduce it in the format. Especially the questions can be relating to provisioning norms, etc. So let us see what are all the areas of discussion. Broadly, 4 areas of questioning. Format of balance sheet or profit and loss account. First thing is format. Second thing, calculation of capital adequacy ratio, CAR, or calculation of statutory liquid ratio, SLR, or calculation of CRR, cash reserve ratio. Okay, this is second. So 3 ratios calculation, second area of discussion. Third, NPA norms, provisioning norms. And the fourth area is your other areas like bills discounting, bills for collection, acceptances and endorsements. Okay. So the format of balance sheet, here no cutting down on the format. Even if an item is not available, you can write the number and put it as nil. There is no place where you can cut down on the format. All the schedule numbers has to be intact. Capital, reserves and surplus, deposits, borrowings and other liabilities and provisions. In the asset side, we have cash and balances with RBI, balances with other banks, or money at call and short notice, investments, advances, fixed assets, other assets. Now, the most important schedules in the balance sheet is Schedule 3 and Schedule 9. Schedule 3 being deposits and Schedule 9 being advances. Okay. So Schedule 3 deposits is about the deposits made by external people or by common public with the banks, correct, which is further classified into time deposits, demand deposits. Okay. And advances refers to the loans extended by the bank to the common public. So the details of schedule on how it needs to be presented for note 3 and note 9, schedule 3 and 9 is also given to you for reference. You can go through it. Moving on to the profit and loss account. Okay. Profit and loss account, the format is going to be for revenue, which is interest earned, then other income. Expenditure, we have two categories: interest expended, operating expenses. This operating expenses is a holistic category. All expenses other than interest and commission expenses will come under this operating expenses category. Provisions. So what are the provisions that will fall under banking profit and loss account? Provision for bad and doubtful debts or provision for NPA otherwise. Second, provision for income tax, provision for reduction in value of investments. Okay, so all these provisions will appear in the profit and loss statement. Total profit or loss for the year. Add profit brought forward, which is opening profits, which gives you the total profit or loss available in the company, in the bank, against which we are going to give the appropriation. What are the appropriations? Transfer to statutory reserve, mandatory 25% of the current year profits, irrespective of whether the question mentions or not. If profit is there, 25% mandatorily transferred. Transfer to dividend, transfer to general reserve. This is depending on the question. And the balance will be carried forward to balance sheet. Okay, so this format is your format of balance sheet and P&L. Quickly run through and you can ask if there are any doubts in specific to the format. Not just cash, for any, if the company is going into long term liquidation or if it is going into bankruptcy, they should have enough money to recover or they should have enough money to pull it out of bankruptcy. They cannot suddenly go bankrupt. So to ensure that reserves are. Yes, it will come in provisions under after operating expenses category. You can show it as a working note. Yes. Right? Okay. Moving on to the ratios that we need to remember for the calculation. The first that can be asked is capital adequacy ratio. The ideal ratio for banks is 7%, minimum 7%. It can be 7 or more than 7%. The formula for capital adequacy ratio is Tier 1 capital plus Tier 2 capital divided by risk adjusted weighted assets. What is Tier 1 capital? Formula is given: equity plus reserves, where reserves will include statutory reserve, securities premium, general reserve, P&L, capital reserve on sale of assets. Similarly, Tier 2 capital, convertible equity, subordinated debts, which is debts which are unsecured debts, otherwise called as unsecured debts. Unrealized reserves like revaluation reserve. However, for revaluation reserve, we need to consider only 45% of the revaluation reserve. So if revaluation reserve is 10, I can only consider 4.5 as Tier 2 capital. Most important rule, On any day, total of tier 2 capital cannot exceed tier 1 capital. Now coming to the risk adjusted weighted assets, you have the risk rates that are given. Cash and bank balances 0% weightage, so it is not considered at all. Balances with other banks 20% weightage. Investments in government securities 0%. Other investments 100% weightage. Loans and advances guaranteed by government or public sector 0. By others, loans and advances given to others 100. Fixed assets 100. Off balance sheet items 100. If it is off balance sheet real estate exposure, then that alone will come to 150%. Yes, this will not be given in the exam. You have to remember the rates. Simple rule: cash and any government related assets ellame 0. RBI cash government related assets 0. Other banks 20. Real estate 150. Meedi ellame 100. Okay, you can just bifurcate like that and remember. So this is your formula for capital adequacy ratio. Similarly, if they ask you statutory liquid ratio SLR, current rate is 18% of demand and time liabilities. What is demand and time liabilities? Need not think very hard. Just the total that you get into note 3, schedule 3. Whatever amount you get in schedule 3, which is deposit schedule is there, no? That schedule you will have a balance sheet total. That total, adile 18% will be your SLR. And similarly, for CRR, which is cash reserve ratio, the percentage is 4% of schedule 3 balance, which is demand and time liabilities. Okay, CRR is different, CAR is different. Read the question before you answer. Right? So these are the 3 reserves that will be tested from bank's perspective in the exam. Part 3, income recognition norms. Income is generally recognized on accrual basis. However, in case of NPA, which means if the asset is classified on NPA, income shall not be recognized on accrual basis. All outstanding income will be reversed and income will be recognized only on cash basis. Okay. And what is the criteria for NPA? Any asset or loan where the interest or principal is overdue for a period exceeding 90 days. Whereas if it is crop loans, for the 90 days condition is replaced by crop season. For long-term crops, 1 crop season. For short-term crops, 2 crop season, which will be given to you in the question. Remember, even if the interest is not paid for 90 days, overdue for 90 days, then also it will be categorized as NPA. Okay, interest amount is overdue. For example, working capital limit. Interest is paid on working capital. Okay, now total interest due was 3 lakh rupees. I have paid only 1 lakh rupees. How much interest is due? 2 lakh rupees is due. For 30 days it is still overdue. Even then it will be considered as, for 90 days it is overdue. Even then it will be considered as NPA. So remember, especially for working capital limits and overdues, the interest outstanding has to compensate the total overdue amount, or amount paid should compensate the total overdue amount. If not, if the period exceeds 90 days, it will become a NPA. Okay. Provisioning norms, quick recap. Standard assets 0.4%, 40%. For NPA, after this 90 days, we are going to classify them as same substandard, doubtful and loss. What is substandard? 12 months time after the declaration of NPAs, which is after completion of 3 months, after completion of 90 days, I will be taking 12 months criteria, in which if it is secured, 15%. If it is unsecured, 25%. And if it is unsecured but backed by escrow account is like amount which is retained in a separate bank account. like margin money, or a temporary account where funds are being retained and maintained. So if the question will clearly mention that escrow account was available. So if it is unsecured but escrow account is available, then the percentage is 20%. For doubtful, again we have the percentages. If it is unsecured, 100. Doubtful secured na up to 1 year 25, 1 to 3 years 40, and more than 3 years 100%. Loss asset fully written off 100%. Very important rule to remember here. If the advances is backed by a government guarantee, ECGC, DICGC, or credit central government guarantee or state government guarantee, then in that case, to the extent the guarantee is available, no provision should be made. Suppose a security has guarantee as well as, sorry, a loan has a security as well as guarantee. First security needs to be subtracted, then guarantee needs to be subtracted. Always remember the order is security first followed by guarantee. Okay? Yes. Guarantee is always for the portion which is apart from the security. So if the asset is both secured and unsecured, then provision will be created for secured portion separately, unsecured portion separately. And for security, the fair market value will, as on the balance sheet date, will be considered. Wherever fair market value is given, it will be considered. Right? So these are the points that you, especially formats and number limits, that you need to remember from banking company chapter. Out and out formula based, out and out format based chapter. Okay. And when it comes to special transactions, bills discounted, calculation of unexpired rebate, bills for collection, and acceptances and endorsements. Of late, in the last few attempts, they have not tested, last 2-3 attempts, they have not tested these 3 areas. But there is a chance this bills discounted can get tested definitely. Okay. Last 2-3 attempts, the focus has been more on P&L preparation, interest calculation, etc. So, please ensure that you remember the formats and you remember the provisioning norms for NPAs. Right? Let's run through the practice questions quickly. The following figures are available from Star Bank Limited. So they have given the values. Other information is available. Issued and subscribed capital of the bank. Preliminary expenses to be written off. Rebate on bills discounted. Opening rebate was 60,000. Closing rebate was 80,000. So what is the rule for rebate, friends? Rebate received, add opening rebate, subtract closing rebate. Okay, so please remember, let me write it here as a note itself. Rebate received plus opening rebate minus closing rebate. Transfer 25% of the profits to statutory reserve, unset. Even if they don't give profit irundale, we need to transfer. Income tax of 8 lakhs to be provided, provision for taxation. G, a customer of the bank became who had taken an advance of 40 lakhs, became insolvent and 25% was a loan to be recovered. So what happens to the remaining 75%? It will be treated as provision for bad and doubtful debts. Okay, provision for bad and doubtful debts. There was no opening balance of P&L account. You are required to draw up the schedules of P&L as it will appear in the balance sheet. Right? So this is question number 1. I believe you can do it on your own. So we are not doing it in the class now. Yes, all the answers, solutions will be provided by end of day. Question number 2, similar question. But here, if you see, they have given the profit and loss statement required to be prepared. But they have given us information on interest on NPA. Interest earned is given, interest collected is given. So which one will be taken for NPA? Collected. So how do we calculate? Let's take an example. Interest on cash credit is 13,65,000, of which interest on NPA earned is 6,15,000, whereas collected is only 3 lakhs. So how do we calculate interest on cash credit? 13,65,000 minus 6,15,000 plus 3 lakhs. So again, let me write here total interest minus interest earned on NPA plus interest collected on NPA. This should be the formula that you need to use. And that value only will be taken to P&L account. Same way for the other two. Okay. Classification of non-performing advances. Why is this classification given? For us to calculate provision for bad and doubtful debts. Provision for bad and doubtful debts. Okay. The last adjustment again is important for us to note. Investment is 20,62,500, of which bank should not keep more than 25% of its investments held to maturity. Market value of the balance investments is 1481,250. What is the total investment value? 20,62,500, of which can you please calculate 75%? 1546,875. So 1546,875 is the cost of 75% of the investment, of which the market value is only 1481,250. The difference will be taken as provision for reduction in the value of investments or provision for diminution in investments. So provision for diminution in investments needs to be provided. Diminution is the word, please use it. Okay. That will be created only for the amount which is not held for maturity, which is in other words the 75%. Okay. So here three adjustments we need to remember. One, interest on NPA adjustment, provision for bad and doubtful debts, and provision for diminution in value of investments. Again, this is a P&L calculation, P&L question. Question number 3 I have taken out from a previous paper, I think 3 or 4 attempts before, which is bills discounted and calculation of whether it is an NPA or not. Okay. Bills discounted, we need to calculate the amount of unexpired rebate by taking the last date as 31st March and till the due date. So from 31st March till due date, we will calculate the number of days and the unexpired rebate accordingly. Okay. And accordingly, remember, opening rebate has to be added, closing rebate needs to be subtracted. Journal entries is also asked. The solution with the journal entries will be posted. You can cross verify. I believe this question is simple. You can solve on your own. Okay, so we are not discussing this at length. Question 3b is a unique question that I wanted to discuss. State with reason whether the following cash credit account is NPA or not. Sanction limit 50 lakhs, drawing power 44 lakhs. So which means they have eligibility to withdraw 44 lakhs. They have withdrawn 40 lakhs. For 3 months continuously 40 lakhs is outstanding. Now interest debited for the above period. So for the 3 months interest debited is how much? 3,20,000. The total credits received is only 1,80,000. Which means total amount recovered from the customer in the 3 months is only 1,80,000. So total credits is here the total amount recovered from the customer. Now, first rule, is it overdue for 3 months? Yes. Is the amount of interest received covering the overdue? 1,80,000 is only received. 3,20,000 interest. Is it covering the overdue? No. So point number one, the amount is overdue for 3 months. Second, the amount of interest received is not sufficient to cover the overdue. Therefore, the account will be treated as a NPA. Is the 2 points clear? So first thing, 3 months criteria. Second thing, interest amount should be sufficient for the overdues, or amount received should be sufficient to cover the overdues. Right? Yes. Write the NPA criteria, write the these two sentences and your answer is done. Sanction limit is the total limit that the customer can avail. Drawing power is the amount that he is eligible to avail based on his assets available. Assets available. Okay? Yes. Okay. Clear? Okay. So here the two criteria again that you need to check, I am repeating. Criteria number 1, 3 months overdue. Criteria number 2, total amount that is received during the period should be sufficient to cover the overdue amount of interest, which is 3,20,000 kaavadu I should have received the amount, but I have received only 1,80,000. Therefore, it is classified as NPA. Yes, then it will not be classified as NPA. Overdue balance is already recovered. Okay. Interest received, or basically installment received in simple words. Okay. So with this, we summarize our banking companies chapter and our revision run for the 2 days. I hope you have taken maximum utilization of the session. Please make sure to make a note of all the points that we have discussed. Okay, so please make note of those points because they are small hints which can help you revise in your during your examination time, right? And when it comes to presentation or preparation, first focus on the areas which are scoring areas and then touch the larger chapters. Okay, start with the smaller topics and then touch the larger chapters. In the exam, always prefer attend at accounting standard first, being a compulsory question. If you are attending it first with full confidence, there is a lot of chance your answer paper is boosted. Okay, attend the question with full confidence, preferably AS question. Followed by that, choose a question which you are fully confident. Okay, don't start with a question where you may not be fully confident about. And most important thing, preferably don't start with questions which are like amalgamation, consolidation, because they consume time for doing. You might be 200% confident, but they consume time. So what will happen when you do the question in full enthusiasm, we will do the second question and we will realize we have already left 1.5 hours. And we will be left with only 3 questions to complete in the balance, 3 or 4 questions to complete in the balance 1.5 hours. We may not complete the paper fully then. So to avoid that, try attempting all smaller questions first and then touch the bigger question, so that even because of lack of time, if you are leaving the question, you will leave it halfway and you will still get some step marks for the question that you have attempted. Okay, so this is a major thing, especially in advanced accounting, that you need to remember, because there is a lot of possibility of the paper being lengthy. So the only way to target it is take all questions which are simpler, easier to answer, and target answering every question within 40 minutes, half an hour, max 40 minutes, not more than that. If you feel a question will extend, put it to the last. And if it extends, even after that you are stuck somewhere, leave the question there. Pause the question there. Go to the next question. You can come back and answer it from wherever you left it. Right? So keep learning, keep preparing, prepare with full confidence and write it with full confidence. Never look back after writing. Okay? Uparwala will take care of the rest. Have a great evening, friends. All the best. And it was a great session with you all. Very interactive, especially even with the online students. Thank you so much. We'll hope to meet soon. Tomorrow, your classes will continue with PC sir, who will be handling your rest of the topics: amalgamation, internal reconstruction, consolidation, liquidation, and later partnership. So the coverage will be as the day goes. Next 3 days, you will be doing all these three topics, these four, 5 topics, right? Thank you. Have a great evening. All the best.